Ken from Avvora Finance.
Hi, I'm Debra from the Property Frontline.
And I'm Gilmovich from Real Property Manager. And welcome to the next edition of Property Mythbusters. And Property Mythbusters are here to debunk some of the contradictions and confusion and the mayhem that happens in the property investing landscape. And this week we continue on in our series and updating you on the actual property market and what's happening in the property market. In particular, we're going to be concentrating on the myth of whether there is, in fact, any bargains out there. Of course, in a market like this, the opportunists come in and they're sniffing for opportunities and bargains. So we're going to have a look at that on both the rental and the sales and buying front. So Debra, first up, I'm going to go into what's happening in the rental market.
You're going to share your screen?
And I'm going to share my screen with the latest data. So here we go.
Here we go.
So the REI Insights, which had just come out the other day or yesterday, is going into some really good data around rental search. But overall, since COVID hit, and we have a look at this national graph here, you can see from the early start of the year where we're just coming out of that holiday lag, and this is of course pre-COVID, inquiry rates starting to lift post-holiday period, and pretty good rental search going on, steady rental search up until, of course, March when COVID was announced. And you can see the very sharp dip by the end of March, where of course, the communities were very frightened with what was going on. And we were, of course, in unprecedented waters, having to deal with the effects of COVID. So because of self-isolation, because of the fear of moving, you can see the rental drops come down quite dramatically up until around about April, where a little bit more search was happening nationally. And you can have a look at the graphs here just across the states. They're quite similar. New South Wales, that kind of V shape. Queensland, WA, you've got that V sharp fall and then a V curve going straight back up around about mid to late April. Now, overall, I have to say it's still a tenant's market. So the tables haven't turned, and there's still a renter's market out there. And by this report itself, it's showing quite a lot of activity going on in searches. So that means that tenants are jumping on and having a look at what's out there in the marketplace compared to what rents they are paying, because overall there has been substantial drops in rents. Some suburbs being affected more than others, and we have seen falls of up to 20% off the weekly rents from this time last year. So you can't help yourself by being curious and tenants jumping on and having a look at the price that they're paying right now versus what they could be paying. And so what we're seeing here at the moment is a very sharp lift in search. Now, that doesn't mean exactly that tenants are out there renting properties straight away. They may be in research mode, and they may be still negotiating with their current landlords and property managers to get a better deal. But I have to say that the opportunity is there right now for, if you're a tenant, with the number of listings, there's pure volume of listings. And in some particular cases, like the CBD, where there's a mass oversupply and we're in double-digit vacancy rate territory.
Yeah.
Absolutely, you can grab some bargains. There's been 1-bedrooms, 2-bedroom apartments that have come off well over $100 to $200 per week this time last year. So in one particular example, we had some tenants come through at an inspection, moving out of a share house situation where each one of them, it was a girlfriend-boyfriend situation. Each one of them was paying a couple of $100 each just for a room in a share house. And now they were able to secure a nice 2-bedroom apartment in the inner suburbs of Sydney for just about the same money that they're paying in a share house, and they have their own private 2-bedroom apartment with a car space.
That's a happy story for the.
And that's a happy story for any tenant. They're out of the share house situation. They're in a private private rental, and they have room and space and privacy to move around at the same money that they were paying previously for the last 2-3 years. Both are in jobs, so the security is there, and they've locked in for 12 months.
But it's not such a happy story for the share house.
Not happy campers in a share house, because it's going to be quite difficult to fill those rooms, especially with COVID and social distancing still being in the back of people's minds as well. Yeah, share houses, boarding houses, rooming market. That's a pretty tough place to live in right now, I have to say. And privacy is space and privacy and health and safety is going to be the top of mind at the moment for renters.
Yeah. Okay.
So just quickly finishing off here, state-based rental activity. This graph just shows the searches and splits it into houses and apartments or units as well. So that's from the 5th of January, and this is a toggle here that takes you across with
They're
a
doing
total
a great
search.
job with these graphs, aren't they?
Yeah, this is terrific data. So what that's telling me, if I just toggle across there, between houses and apartments, there's a little bit more activity in the houses search. And traditionally, well, I have to sum it up as this. Basically, the houses is the scarce product, and the apartments is the abundance product. And those who can't afford, of course, in our inner city markets to purchase a house, because Deborah, you'll take over and talk about the sales prices, but we still have an affordability issue with the homes, with the quarter-acre backyard. Yeah. And so the houses are well in demand, and the houses are the ones that haven't taken the largest hit as far as rent reductions. The apartments have, but not so much the actual houses, because there is a short supply and there is high demand. Yeah. Right now. Yeah. Okay. So that's the summary of what's happening in the rental market up until this point.
Okay. Well, thanks for that, John. So, Ken, over to you from the broker and finance side.
Okay, sure. So I guess it's a quick update in terms of what's happening. I'll firstly cover off with the lenders. Some of the majors, they're still kind of struggling with service levels in terms of processing the volume of applications, primarily finances. So that's come down a little bit, and they're processing a little bit faster, but still they're still not operating off pre-COVID numbers, I guess. And Deb, you mentioned you spotted an article about the ABA, Australian Banking Association, discussing what's going to happen in September about the relief packages that they've given borrowers to put a pause on payments for their home loans. I haven't seen anything through the back channel yet. So usually when we receive information from the lenders, it's all done and dusted. They've got the processes in place and policies in place. But I guess we're about 2 months out from that, so I should probably start seeing some of that. But they have discussed extending that deferral just to give people a little bit more of a runway. So if you are in that situation, that's a situation that's developing, and there's probably going to be more news around that closer to September. And then, yeah, I guess in terms of, are there any, so we're talking about how, the myth today was, is there any bargains out?
Bargains are plentiful in the current market.
Yeah, that one's an interesting one because, yeah, I mean, look, from a credit side point of view, first home loan deposit scheme, there's been a fresh batch of 10,000 spots available. Lenders have changed how you apply for that slightly. Used to need to book a spot and then apply, but now, you know, they're doing approval first and then booking the spot, or doing that concurrently. So, yeah, I think there's still a lot of activity out in the market when I attend open homes on the weekends. Credit, the ability to access money, still got quite a few clients who are, getting pre-approvals and things like that to purchase property. So from a credit, people having the money to go ahead and make the purchase, there isn't any real hurdles unless you've been significantly impacted by COVID in terms of working in the industry, hours cut, or, you know, running your own business. And yeah, it's been severely impacted. Apart from that, because there is a focus on income. So if, you know, your income has dropped recently, it's going to impact your borrowing capacity. It's a focal point of lenders to make sure that you're still receiving the income that, you know, you previously were or currently getting. But yeah, so I don't know, there still seems to be quite a bit of activity happening in the credit space. I know so people just attending open homes and things like that, which I guess would be a good time to hand over to you, Deb.
Yeah, okay.
Your thoughts?
Alrighty. Well, let's firstly talk about the numbers. So I'm also using one of the new realestate.com graphs as well, which I absolutely love. They're doing a fantastic job with these. So these are sort of more predictive type of graphs. So this one is the weekly demand index for residential purchases. And so it's about, you know, how many people are actively looking on their sites at least. So they're saying that, and this is the national view as well, there's still serious buyer activity, and it's much higher than the low experienced in late March, early April, and it's still 33% higher than the same time last year. But basically, so we're still seeing very high buyer demand, but of course what people are looking for is much different. So similar to John, in that people are looking for houses more than they are for units. And I am starting to see more people starting to look a little bit further out. So talking to people who are looking more for like Central Coast or Moss Vale in Sydney, and also in the other states or the other capital cities, looking just a little bit that further out of the city. So people are more flexible about location at the moment. In relation to house prices though, and this is of course SQM data, which, you know, is one of the most reputable and reliable forecasters, so Lewis Christopher from SQM. And you can see here, so the general price in Sydney is still 12% higher than it was this time last year. So they're saying over the past month, it's gone down 1%. Over the past week, it's gone down 3.4%. So we're seeing sort of quite variable changes, but like overall, are we seeing bargains there? If there was going to be tons of bargains, this would be in the red, and it's just not. So similarly in Melbourne, so over a 12-month period, 9%, and so it's really Darwin. So is that Darwin or houses? Hang on. Oh, wow, look at Darwin. So really massive impact on units, but houses is up by 11%. Right, so there is chatter in the industry where people are saying, well, we're really starting to see the market turn, but from what I'm seeing on the ground, we're still seeing a lot of heavy buyer demand that's actually holding up the prices, and of course there's not as much stock, so that's still keeping a lid on things. And so let's talk about what everyone's like the big issue that is under discussion at the moment is this talk of the cliff. And so this is where JobKeeper and JobSeeker are supposed to finish, and also the waivers or deferrals on home loan repayments are supposed to finish. But really, I think both federal and state government have shown so much willingness to actually make sure that any issues of a cliff will be mitigated. And also the banks now have come in, as Ken was saying, the banks have now stepped up and said that they won't be cutting everybody off and switching them all back to full payments from September. So it will mean that people who are under real hardship will be able to continue on and extend. And so I think we'll see this whole cliff thing just be really very well softened. And so we have to look at, well, what kind of market are we in? So we're not in a post-COVID market anymore, we're just in a market, and the market is behaving the way it always does. So where in times of uncertainty, there's a flight to quality, and so property that is oversupplied or doesn't have any really good long-term prospects or good yield will not be popular. There's sort of less willingness to take a gamble on property, and so that brings me to the topic of, well, are there more bargains in the market at the moment? And from my perspective, there isn't, because when we're thinking of bargains, what's the definition of a bargain? It's something that is still good quality, but that you're getting at a lower price. And what might happen is that people think that they're getting a bargain, but all they're doing is buying bad property at a low price. So the moral of the story is, make sure you do your good due diligence and think about what you're buying and what it's going to look like further down the track. So a bargain is not a property that has no opportunity for uplift further down the track, or that is never going to give you a good yield, or that you can't add equity to by improving. That where there what I would call a bargain would be a property that is in a Ripple suburb where, a suburb has experienced good capital growth, and so you buy just a little bit further out where you can see the growth coming. And these are all still your good buying fundamentals. So any comments from you two about that?
Deborah, yeah, you absolutely nailed it. That summarising the bargain situation, although it feels terrific to buy a bargain, it can be a bit of a mirage.
Yeah.
When it comes to property, price doesn't always dictate quality, as you said. And anyone that's out investing in this kind of market right now needs to really consult the professionals that are on the ground.
Or even when you're buying your home, because we all accept that while your home
then
should
shop
be
on price.
Yeah, but your home should be about shelter. But the reality is your home is probably going to be your biggest investment purchase, even if you don't buy any investment property, it's going to be your
Yes.
biggest asset. So you really have to have, a good game plan. And so if you want to buy a bargain, you might be thinking about buying, say, a 2-bedroom house that has potential to add, another couple of rooms by either going out or up, or a property that is on a big block of land where you can split it. So, I think there's going to be...
You shouldn't go into purchasing a property just for the sake of purchasing a property.
No.
Yeah.
There's a lot more to it than that. Just going in for the sake of buying a property is not a strategy.
Yeah. And so do you have an opinion about the cliff? Either of you?
Ken?
For me, I think for things like this with uncertainty myself, I tend to just see how it plays out. I understand there's a lot of, moving parts, I guess, with, JobKeeper payments coming off. So the cliff we're talking about is the, when all the payments and the support, I guess, kind of ends in September, around about September. And I guess there's a lot of uncertainty in terms of, what's going to happen with the economy. Is it still going to keep going, or, is it literally just going to go dead? I don't know. I'm assuming, there's what do you call, the government's aware of that, and they're kind of, all parties, everyone's kind of pretty aware of the critical nature of that period in September. But I don't have, for me, it's kind of like play it by ear and see how it kind of progresses. So it'll always be a question mark. So I think there's always the three, like whenever talking to clients, there's always like 3 options that the way that things can go. Usually it's like, it could go better, it could go worse, or it could stay the same, or anywhere in between, So, yeah.
So buy with that kind of thing in mind. So, don't sort of stick your neck out and
exactly. Maybe being a bit prudent, because it sounds good if you get in now and everything works out well, but what happens, think about your contingent plans, plan B, plan C, what's going to happen if it goes against you, how you're going to hold the property, things like that kind of come into mind. Did you have I'm interested to know, what about yourself, John?
About the cliff? Well, again, it's going to be the unknown X factor, isn't it? And it can go either way. I'd hate to be Scott Morrison right now and making that decision with the treasurer, because it's not an easy one. There's a lot of factors to withdrawing or curbing, or even segregating industries where some are getting support and some are not. That's a hard call, and I don't really know what they're going to do. but also I'm of the opinion that the government just can't continue with the stimulus as we're getting more and more into debt. And secondly, we don't want to form these new habits of people just getting money without the productivity. That's my worst fear.
Yeah, I know, because like these measures, so JobKeeper and JobSeeker, that was really to absorb the shock. So there's no shock now. We're in this market. We know what's going on. And so it's really time, I think, for people to like step up.
Yeah, job listings are up, especially in hospitality. They are recruiting, but I hear on the ground that they're not applying. Workers are not applying for the jobs because government's still dishing out the cash. Yeah.
So, of course, there are some people who are in genuine hardship, and they're the ones who still need the help. So, but yeah, I just don't see that. I think the government has many levers that they can pull, and so they'll do whatever it takes to keep the economy bubbling along. And we've already seen, a lot of talk about the infrastructure projects, and then they've clearly got some plans, but we just have to get through the next couple of weeks and hope that the Melbourne outbreak doesn't spread. I feel sorry for the Melbourne.
And get people back to work. Get people back into work, back to work, reopen businesses and start moving things along.
Yeah, okay. Alrighty, well, I guess that wraps us up for today. So thank you very much for watching. If you've got any questions, don't hesitate to send them through to us, or any myths you would like us to investigate on your behalf. If you would like to contact any of us, we can all be contacted via the YouTube channel or our Facebook group and our individual websites. So John at realpropertymanager.com.au, Ken at avvora.com.au, or me at the Property Frontline. Actually, I'm propertyfrontline.com.au. So thanks for watching, and we'll see you again soon.